Hey, folks. Jeff Brown and I moderate the opening bell session together every day. And, we've been talking a lot about Bollingers, and especially Jeff has. Jeff's been incorporating them into his trading. And so we thought that maybe we could get together and talk a little bit about Bollingers and how he uses the Bollingers to help him make better decisions in his trading and give him confidence. So with that being said, Jeff, you want to kind of just go through how you incorporate Bollingers and you put them on your charts?
Sure. First of all, good morning. Good morning, Rob.
Good morning.
Yeah, I want this to be a little bit interactive. So as you see things, if you want to ask a question or you think there's a clarifying point, please chime in.
Perfect.
I'm going to start with a simple 5-minute chart on the MES. If it's different than yours, I've got green for candles going up, blue for candles going down. I have 3 EMAs on here, a 21 period EMA, 89 period EMA, and a 200 period EMA. And in this particular case, on the day we're shooting this or recording this, we are clearly in an uptrend, right?
Yep.
Everybody's pointing up, nothing's crossing. We got some nice price action here. You can make some nice points if you know how to read the charts. I always had difficulty understanding the difference between a pullback and a trend reversal. And one of the things that I came across that really helped me out is putting Bollinger Bands on my chart. And what the Bollinger Bands are is they simply do mathematical functions in the background and plot them on your chart, right? So they put on the mean of the price action for however many periods you have on, and then they calculate the 1 sigma or standard deviation from that group of candles, and they plot that as well, right? And it's dynamic, so think of it as dynamic trend channeling, right? It puts it on.
And Jeff, real quick, one thing too about the Bollingers. I know folks that use Bollingers not just on the indices like the S&P 500 or the Dow or the Nasdaq, but I know people that use them in crypto, that use Bollingers with oil when they trade oil, with gold, you name it. With their stocks, you can use the Bollinger Bands across a wide range of products. Basically, as long as you have candlesticks and charts, you can use Bollingers.
Yeah, and that's a really good point. They're sort of agnostic, right?
Mm-hmm.
They since they're mathematical, anytime you have a chart, you can put a Bollinger Band on it, and it simply tells you the mean and however many standard deviations you are from the mean. And if you understand statistics, it makes it kind of simple.
And when you say mean, what do you mean by mean? Do you mean the middle?
Mean is the mathematical average.
The mathematical average, or in layman's, the middle. The price action.
Yes. The center.
The center. Right? Got it.
So in the absence of a market bias, the price will go back to the mean. All right. So let's put a Bollinger on here, and
we do have a video too, folks, at Futures Networks Live in our member site, where Derek goes in detail about putting on Bollingers. So Jeff isn't going to go into real detail. He's going to just do basic stuff here. But if you want to see a little more detailed version of putting on Bollingers, Derek has one in our Trader Utilities.
Yes, and it's very good. It's a very good video. So just go to your indicators, Bollinger, add. Now, I want to put a 1 sigma Bollinger on. I want to have 10 periods, strictly because I find the 10 period to be more reactive than the 14, but not so reactive that it appears jumpy. It's still smooth. I leave the Bollinger on bar close, although you can change that if you want. If you want it on each tick, you can do that. But for the purposes of this recording, let's just leave it there. So let's do another couple of things just to accentuate. Let's make these weight of 3. Let's put the top in a dash, and let's come down to the bottom, make that a 3. We'll leave that solid. And then the center line, oops, this is the center line. Let's change this color to let's just go to black. All right, that way it'll stand out and we can really see it. All right, and then the lower band we'll leave goldenrod, and solid we'll just make it a little stronger.
Now, I do believe too on your center lines for your Bollingers, you're going to want these all the same colors when you're adding multiple. So because they're all going to be the same, correct?
Yes, I usually color the first Bollinger and then make all the rest of them transparent.
Okay, same difference. Got it.
Yeah. So you only have one come through. So let's take a look at how this appears on the charts. Let's open this up just a little bit. And you can see that the price oscillates around the mean, right? Every 10 candles, this is calculating what the average is. So since these candles are above the average, right, upon close, they're going to pull this average up. Anything that's below the average is going to pull it down, and that's just how it works, right? So it smooths out that price action. So under normal circumstances, 66% of the data of the price action will lie between the first sigmas, right? The +1 sigma and the -1 sigma. 66% will be between those two. But the market isn't normal and the market isn't static, right? There are biases that come in all the time. And what we want to do is take advantage of those biases, because a market with no bias, right, is just random. You don't have anything more than a 50-50 shot in any trade that you take if the market is normal and unbiased. So we're looking for situations where the price action is moving in a direction, right? That has a trend. Hard to see trends forming sometime, but let's put on some other Bollingers, right? And see if we can't help accentuate that price action. I've already drawn these. Let's accentuate that price action variation and see if we can see trends forming and when they form. Okay, so now this chart gets a little bit busy, so just bear with me here, okay? What I've done is I've made these bold. And so we're looking for a situation where the price action comes outside the 1 sigma, right, and runs to a 2 or 3 sigma. Right now we're not. Let's go back, and I'm going to see if I can find a place where the Bollingers are flaring. Yes, here we go. So if we were at this point in the this point in the day, 10 o'clock, let's say, right, all of a sudden we see that the average begins to come up. This is opening bell right here at 9:30. Opening bell sort of went back and forth, didn't have much of an effect. But shortly after opening bell, right, all the candles had their price action above the mean. And because of that, it started pulling the mean up. And because this price action was biasing the calculation for a standard deviation, right? The standard deviations started getting bigger. And as they get bigger, you can see the Bollingers begin to flare, right? So I put on the 4 sigma mostly because I want to see the flare. The flare is accentuated more on the 4 than it is the 3, more on the 3 than the 2, and so forth.
And we can even see that, Jeff, even bigger too, going back at 8 a.m. this morning, how it was really nozzling there with not a lot of price action, not a lot of,
Sure.
volatility. See how it's just kind of going straight there at 8:15, and then all of a sudden, boom, it takes off. And, at 8:30, that's probably from a report or something. But so that nozzling effect is kind of what we want to stay away from what I've seen. And what you're describing now is when that price action starts to move, that's really when we want to get in it. Is that correct?
Exactly. So
Okay.
what we're looking for is we're looking for someplace where we can have an advantage. We get an advantage in a trend, right? We can see a trend when all the price action starts happening above or below the center line, right? This mean. And when that happens, we begin to drive the Bollinger Bands apart, right? That variation and how it's calculated, how the standard deviation is calculated is it takes the difference between this average and all this price action and does some mathematical squaring, adding, and then dividing. And so the further you are away from the center line, right, the bigger the sigma becomes. And as the sigma gets bigger, it starts moving faster than the average moves. Does that make sense?
Yes. Yes.
Right.
So
So you
that's
can
why we see those. That's why we see those sharp lines up, because the price action has outweighed the center line, and now it's really starting to move. And that's kind of what we're looking for in this kind of scenario when it's nozzling. For it's going to go one way or the other, correct?
It should, yes,
It
it
should. It
should.
should. I
Now
mean,
back
yeah.
here, you could see that the price action was getting closer to the mean. And what happened to the Bollingers? The Bollingers nozzled in, right? They got tighter together, right? And as soon as the price action began to deviate from the mean, then it starts to flare. So what I look for is I look for candlesticks with small tails, small whiskers, right? That tend not to retreat back and then go up, right? That there's a strong bias in one direction and the price action just stays in that in that direction. So here we've got a half or 3/4 of a point tail. Here's a 1/4 point tail, right? One tick. So this is a great place to get into a long buy. And you can see we closed outside the 2 sigma. Very strong indication of a trend. Good place to be in a buy and follow this along. So let's follow this price action just a little bit and see what happens. Okay, so now the price action starts getting closer to the average, right, to the mean. And as it gets closer to the mean, it begins to nose over, right, and curl in. We call that nozzling, right? And when it nozzles, right, we are back into, I'll say, a normal distribution where it's a 50-50 shot which way it's going to go. And that's not, in my opinion, the way I want to trade, right? I don't want a 50-50 shot. I want a bias. I want a 55. I want a 58% chance of winning, right? And so I look for the flaring, or conversely, if this didn't nozzle all the way in the way it is, if these bent up so that they were all pointing up, still a good place to trade. So let's let's watch these a little bit more. Okay. So we could see we're inside the 1 sigma, the pink, right? I'm sorry, the gold is the 1 sigma, right? So we came inside the 1 sigma, sort of bounced around in there. Now we're bouncing between the two. Matter of fact, this candle right here was a 2-to-2 cross, right? This we're starting to see a lot of variation, right? Here's opening bell. If you're not in an opening bell trade, for the sake of being in an opening bell trade, probably not a good time to jump in because you don't have an advantage. But as we come out of the opening bell effect, what happens? Right? We're on the top of the average here. We start pulling the average up. We start flaring the Bollingers, and again, great place to get in. You know, you look for a retracement. You might be on a 2-minute or a 3-minute chart, looking for a retracement. You get in, and then you ride this thing up. And a good sign that you're in a good strong trend is when the bodies of the candlesticks stay between the 1 and 2 sigmas. When they stay between the 1 and 2 sigmas, that's a good strong indication of a trend. These blue candlesticks here, great retracements, great opportunity to get into the trade. You can get in, you know, pick off 4 or 5 points, get out, come back, wait for a retracement, come in, you know, and continue to do the same. So now we're into the Bollingers are beginning to nozzle, right? We've already made some points back here. The Bollingers are beginning to nozzle. We get this big candle come in, right? We went into no man's land between the 1 sigmas, right? So we're not trading, coming in, watching it, right? Again, it's going back up, and it's just nozzling. Look at what's happening to the Bollingers, right? They're just nozzling down. This is a good time to watch the price action.
Yeah. So that center line, that, you know, it seems like everything always comes back to the center line at some point. At some point, it always comes back, whether it's below it or above it.
Yeah, there is a central tendency. I mean, that's the theory of you know, central tendency, that if you take the bias off, so let's say a big buyer came in, bought up a bunch of contracts, drove the market in one direction. If there's not a follow-on to that big buyer, right? Somebody else, or that big buyer coming in again and buying again, right? The market's going to naturally slip back to where it was, because it had a comfort zone before the big buyer came in or before the news event came in. It's going to move back to that area. It's going to have a central tendency back towards the center line.
Got it.
Now, there's one other thing that you can do that I like to do sometimes is, whatever your risk scheme is, right? Let's just say it's a 5-4 or 7-5. Let's say it's a 7-5. You want to be opportunistic, right? So you come in here and you say, okay, I got a 7-5. I'm in, but I think this is pretty strong, and I don't want to get out just yet, right? I think I'm going to tie my trade to one of these Bollinger Bands. And so as the market expands, your trade expands with it. And you don't have to be exactly like this is the 2 sigma right here, the that I'm highlighting, you can say, hey, I want to be the 2 sigma plus 8 ticks. So if it gets up 2 points above this sigma, then I want out, right? And then conversely, you can watch your stop and make sure your stop kind of follows along. And that's been a way that I've been able to expand my trades and opportunistically take my risk level and expand it a bit. Doesn't always work, but when it does work, it's very rewarding.
Well, and the beauty too is, folks, you guys, if you come into session with Jeff and I in the mornings, you'll see Jeff do this on a fairly regular basis. I would say, 4 or 5 days, he'll one of his trades or 2 of his trades, or even if you just ask, say, hey, Jeff, can you show us how to tie your stop or your fill to your indicator? We can do that for you as well. So pretty neat.
Yeah, exactly. And, you just have to be smart about it, right? I was in a trade the other day and I said, okay, I wanted to tie this to the +2 sigma, right? Because I had to step away for just a couple of minutes and I, wanted it to be managed dynamically. And I was going to tie it to a -2 sigma, my stop to a -2 sigma or -1 sigma. And then I thought to myself, what if these things flare? Right? What if we get in a market where all of a sudden these things flare? Now my stop is running away, right? So don't want to do that. So you just have to be smart when you tie it to an indicator and make sure that it's moving in the direction you want. And many times, if it's been in what I like to call the bowling alley, the 1-2 sigma area here, if it's been in that for hours, and we've seen it where it's been like that for hours, man, you could do really well just buying at the 1 sigma and selling at the 2, and just use that as a dynamic trend channel. And
well, a lot of different ways you can use the Bollinger, and I think one of the reasons why I like the Bollingers is people find ways that work for them. We hear Anthony Crudelli talk a lot about taking out highs, and you can see here that we had at 9 o'clock we had a high on the Bollinger. And then what happened? Well, we took out another high. We took out the high of that Bollinger up there, up to the top, your top Bollinger band, any of those. Once the bands start taking out highs, and we see this on longer term charts as well, that you're probably trading in the right direction. Now, conversely, if we start taking out lows consistently, then we're probably need to be trading short. And you can see here that at 10:15, we took out the high from 9 o'clock on the Bollinger. Now, is this going to continue? I don't know, but it gives us a little bit of trend confidence when we see the Bollingers taking out previous highs. And you can see that on not just a 5-minute chart, but a 15-minute chart, a 30-minute, a 60-minute chart. So again, that's kind of what gives us that confidence to trade in a certain direction.
Well, I hope this has been helpful, Rob. And
it has. You bet.
I hope everybody uses the Bollingers successfully.
Perfect. Well, thanks a lot, Jeff. And look for more indicator videos to come out and how we use them. Now, listen, there is no one way to use anything. There's a variety of ways that folks can use it. It's how you perceive them and how you utilize them to give you an advantage, or as Crudelli likes to say, to develop your edge. So I would recommend watching Derek's video, go over this again, incorporate Bollingers, and do a little due diligence. We've also got a blog on our website on Bollingers that Randy did. Randy Stewart, one of our traders down in Dallas. So again, these indicators are here to help you get an advantage. You can't get overwhelmed by them, but I'll tell you what, if you take it one step at a time, ask for help, come into session, you can help it improve your trading. So thanks a lot, Jeff.